Hey, and we are back for the update with the real estate market here for the Denver metro area. Again, joined as always, my beautiful bride, Brenna, with land title. To
Hello.
Yeah, so we want to review, obviously, like we do every month, what is the real estate market doing? Again, Brenna and I are passionate about being your resource for the right information. What do the numbers tell us? What is the data showing? So that when you have questions around the real estate market, you know where to go to for the correct answers. And again, if you're tuning in and you're watching, please jump on, leave a comment, let us know that you're here. Now, as we get rolling into this month's numbers, wanted to go over just what it is that land title does, because I think there's a big confusion for most people as to what is title insurance? What is it that you do? It's more than just the actual act of the closing table, right? The doing the documents at the closing table, which is not part of your job, right? You're not there. So share with us, what is title insurance? What do you do?
Yeah, so title insurance has two big differences from most insurance. One, which is great, is that it's a one-time premium. So it's based off the sales price and you pay it at closing. Most of the time the seller pays, but obviously everything is negotiable within the contract, so that can be dependent. But typically the seller pays. It's based on sales price, and you pay it one time, and you're protected for as long, you and your heirs, for as long as you own the property. The other big difference is that title insurance protects you from what has happened in the past, not what will happen in the future. So we call kind of the life of a home or a property the chain of title. So from the beginning, from the first thing that was recorded, all the way up to present. And that is what you are with title insurance. We're protecting that the property is being purchased free and clear, so it has no liens or encumbrances that you are not aware of, and that you are the rightful owners of it. So it's not overly sexy, and most people don't know about it. Honestly, when I bought my first home, I didn't even know what title insurance was, and I didn't know I had it. So it's definitely something important when you get that title commitment to look it over, to talk to your agent about what the different things are. And then if you have other questions, obviously title can kind of tell you what's going on. We can't advise you legally because we are that neutral third party, but we can tell you, oh, there's a mechanic's lien on it. You should talk to someone about that. But some of the things it protects you from is a lot of the fraudsters. So if someone was to draft up a fake deed and say that they bought the property, land title or whomever you have your title insurance through protects you from that. So we pay for the lawyers, we pay for any damages, and hopefully can come to a resolution and not just pay. I think one of the biggest claims that we have here in Colorado is survey issues. So if someone has their fence, the fence is not the lot line. So if someone does a survey after you close and they see that really the fence is 3 feet in their property, we have something that's called owner's extended coverage. So that would cover any survey issues, even if a survey wasn't done. So let's just assume in the situation that you have that, land title would come in, we would work with the people that have made the claim, we would pay for any legal expenses. A lot of times we can, pay them for that portion of their property, or we can pay you for that portion of the property, depending, but we're there to help you. There's different things with people coming in, like heirs that were not recorded and say, hey, my great-great-great-grandfather owned this property, now it's mine. We protect you against that. We protect against if a divorce was not recorded and someone comes back in and all of that. So there's a lot of things that we don't really think about, but it can be very, very costly if you do not have insurance. Now, a question I got asked recently was, is title insurance mandatory or is it required? And the short answer is no. However, most lenders require it. And I would definitely recommend it, but it is that, one-time premium. But if you are getting a loan, most lenders would require that just to protect themselves, because they are the ones fronting the money. So if you have specific questions, I don't want to go into a deep dive on title, and there's so many different if-then situations. But if you have questions, ask Matt, ask me if you have anything that comes up. But hopefully that was a very high-level overview of kind of what is it and why you need it.
Yeah, and it's funny that you brought up fence line. And I remember the first house that I bought, somewhere in the process, I heard that my fence was actually like 3 feet or 4 feet inside of my property line, that I actually owned property on the backside of the fence. Now, there was nobody back there. It was an empty parking lot. So it didn't really matter to me. I have since learned that the current owners of that house decided they were claiming it back, right? It's manifest destiny. They're pushing that fence all the way back to reclaim that yard. I just looked at it. It was going to be more yard for me to maintain at the time. So yeah, most people aren't really sure. All the other insurance that I have is about future things, right? My homeowner's insurance, hailstorm comes in and destroys my roof, the siding on the house, it pays for that stuff in the future. Title insurance, something may have come up in the past, so who's got ownership? And when there's a claim, it's typically pretty expensive to get through. So thankfully it doesn't happen often, yet when it does, we're certainly glad to have a partner like Land Title and just Title Insurance to step in.
Absolutely. We have a great legal team. I'm so glad I don't have to deal with the claims, but they're fantastic and really good at what they do and helping people come to resolution.
Well, I think that's critical as folks. One thing they need to know about their title insurance, if you refinance your house, this is going to come up a little bit more often. Yet there's a lot of title companies out there, and from my understanding, and I'm not an attorney, I'm not an expert on this, but it doesn't take very much to start your own title company. So if there's a claim with this title company and they don't have the financial backing, where does that leave you? I always recommend to my clients, let's stick with some good, reputable title companies that are going to be here in another, 10, 15 years in case stuff goes out. That's why Land Title has always been one of the ones that we recommend.
Thank you. Yes. And to answer that question, if the title company goes under, it depends on the underwriter as well, which is really important. But a lot of times you're on your own to pay for that. So it's a big deal. And, we hope that we never have a claim and it's great. And, but that's why we have insurance, is just in case we need it.
Yeah. And if you're going through the process of refinancing the house, you can absolutely tell the lender who you want to have as your title company, whether that be Land Title or anyone else. You don't have to take just the title company that they typically work with. Sometimes it's a super cheap title premium policy for a reason. They're not very strong in the underwriting or anything else. So I think we've covered the title insurance piece, at least to get some questions answered. So let's touch base on the real estate market. It has felt a very rapid pace. Not a lot of inventory, still very high demand. When my team is setting up showings, we're running into no overlapping showing issues. So it's a juggle, right? It's trying to coordinate that. Let's talk about what the real estate numbers look like. And I know that you've got the numbers ready to go and share. So we'll pop this up here. So let's start with the highlights.
Perfect. And you can see my screen, right?
Yeah. Your screen is up. You're good.
Okay, great. So something I want to point out, and I'll kind of echo as we go through here, is that obviously year over year, so September to September, because we're looking at September numbers, is massively different. COVID 2020, it does not follow the trends that we're used to. We'll see that when we look at some of the graphs. So as far as predicting or looking at the trends as far as what's going to happen, year over year can be a little bit deceiving. It's definitely a great indicator of what's going on in relation to what we're used to and why it feels so much the way it does. But I also want to point out our month over month numbers. So from one month to the next, because that really shows us what's happening, some leading indicators, some lagging indicators as far as maybe where are we going in November, December, as we go forward. So the first bullet point here is pending transactions, which is under contract transactions. It's up 22.3% year over year. But something to note is that we're down 11% month over month. So we are slowing a little bit with what is going under contract. Now, days in MLS is the same as last month. 23 days on market, but it's 9 days shorter than this time last year. So when you feel like you are just running, that's real. Typically this time of year, we feel a little bit of a cooling or a seasonal slowdown. And we are just maybe barely seeing that, but really we haven't seen it yet. And days on market is, or days in MLS, or the multiple listing service where agents put your listings. That's MLS. That 9 days is a really big number as far as speed of market. So just know that going in on the sell side and the buy side, that it's faster than it has been this time typically. Sold units is the highest that we've seen in several years. It's up 26%, but we are down about just over 2.5% month over month. So again, that's not very much, but it is a little bit of maybe like a breath or a pause. And we'll definitely see what happens in October and as we continue. And that's a massive number. So houses are coming onto the market, but they are going very, very quickly, especially if they don't need a ton of work and if they're well priced. There's just not a lot of inventory. Now, with all that being said, I think this next bullet point is something really interesting. Adams County is the most reasonably priced county, and their average price point is $150,000 for detached single family, less than the rest of the metro area. So that's pretty incredible. So if you do have some flexibility in where you're looking, Adams County might be somewhere to go. I know that when Matt and I were looking for our first home, what was it, 5 years ago now, Matt? 4 years ago?
4 years ago.
We started west of I-25, and we were looking in Westminster and even some in Arvada. And I did not like what we could get. And I mean, everyone's situation is different, but I was like, oh my gosh, I feel like we're spending a good amount of money and I'm not getting all the things on my checklist. And then we looked into Thornton, and we actually ended up in Henderson, and it was amazing how much more house we could get for our money. Now, everyone's situation is different. We were in a position where it was close to the highway, and we were able to do that. Obviously, with school districts and jobs and everything, that's not always a possibility. But if it is, that might be something to look into, especially if you're just spinning your wheels, looking west of I-25 or in a different area like that, especially, that main Metro Denver area is just incredibly competitive right now.
Yeah, it very much is. And Adams County has a lot of value. They're doing a lot of building. There's great things happening in Adams County. And I think you were more looking 4 years ago west of I-25. I had a pretty good idea where we were going to end up. Didn't quite think we were going to end up in Henderson, which is a small pocket there near Commerce City. But yeah, the Thornton area has been absolutely fantastic. We compared our new house, right, the new house that we had built a year ago, to the same model in Arvada, and we just got so much more being on the east side for what it was we were looking for. We would have spent more money to ultimately end up with what we felt was just a little less desirable.
Yeah. The other thing that's interesting and that you have to keep in mind is between 300 and 799,000, 85% of homes are going for over their asking price. That's insane.
Wow.
Yeah. So,
Share that number again, because
yeah,
it's unthinkable, right, to just hear. But what, it was 85%.
85% of homes in that 300 to let's call it 800 are going for over asking price. Now, we don't know if that's $1,000 over asking price or 100,000 over, but that's a massive, massive number. So that's great for sellers. It can be challenging for buyers, but as we talk a lot, it's setting expectations, it's understanding what you're walking into and making a good game plan. So if you're looking at the top of your budget, you're probably going to get frustrated very quickly. So just know that coming in, know what you're dealing with, and you'll be more prepared and get what you want without as much frustration.
When I saw this a number of years ago, not quite at this pace. Now this is something that's new, that it's moving this fast. I saw a client that we were working with, a buyer, their price point literally just moved right past them. What we were looking at, they were kind of holding on. They were dragging their feet, didn't really love what they were seeing at their price point. And then it seemed like the next month there were no homes showing up in that price point. They literally kind of just weighted themselves out of the market. So, for buyers that might be in that position where, they're just waiting and waiting for the right house to pop up, the right house might pop up and it may be $50,000 more than you anticipated it being, because of that. So, again, you've shared this so many times, everybody's situation's a little bit different. We do have to be very strategic in how we approach this market, and the numbers are telling us that.
Yeah. And something interesting, this next little bullet point, we are up year to date 2.6% in total units. So even with our little crater, our COVID crater there, we have made up and exceeded what we did last year. And that is definitely what we've been feeling since about mid-April, May, that it's just kind of speeding along. But, we were curious, at least, especially when we were starting out, how is this lull going to affect us? Now, there's a lot of things on the horizon. 2 weeks away is the election. There's talk of things being shut back down again. So we don't know. I mean, 2020, it's like hold my beer and watch this, right? So I don't know. But we have, to this point, recovered incredibly quickly from the little backslide that we had with COVID.
Yeah, and I think if you listen to the news or you talk to a number of folks, they said, oh my God, the housing market, here's the correction. It's going to plummet. We're going to be able to, the investors are like, we're going to be able to buy everything super cheap as everybody's going to be losing their homes and everything's going to be just going bananas. And that's really not yet what the numbers are seeing. And I love this slide because this is actually the showing traffic. So how many showings are being set up? And the first thing that we notice when a shifting market happens is buyer traffic starts to drop off. So fewer buyers are out looking at homes, and that starts the process. That's one of the first things that we're looking for to see. And this graph is comparing 2019 to this year. The yellow line or gold line clearly being this year with the COVID crater, as you've named it.
Yep. So
anything you wanted to share on this? Sorry.
Oh, no, that's okay. So obviously you can see the COVID crater. I think it's interesting, a little bit off topic, but we always talk about different holidays and how they affect. And you can see over 4th of July, there was a definite dip. but you can see in 2019 it was very, very similar. So, as we talk about listing on Memorial Day weekend or Mother's Day weekend or 4th of July weekend, that might not be the best time for sellers. It might be a great opportunity for buyers. This showing traffic really indicates that. So, a little bit off topic, but I think it's important to just look at that data and be able to see it visually. But then as we look into October, we can see that we're just above where we were last year for showing. So even with the extra regulations and no overlapping showings, we're still having more showings than we've had this time last year. Something that I've said before, and I'll reiterate again, is I believe because of all of the stringent regulations, we have more qualified buyers doing showings right now, because you're not going to do the masks and the hand sanitizer and all the things if you're just kind of looking to see. So that's kind of interesting. But as far as a slowdown, we'll see what these numbers look like for the rest of October as we get them in. But the little slowdowns that I'm talking about are that they're little. Our showing traffic is still showing that people are out there and they're looking for the 5 homes that are available in Denver.
Yeah, and I've said this before. I liken it to little kids, 5-year-old soccer. The entire team is chasing the one soccer ball on the field. Nobody's spread out. Nobody's looking at different things, and at times that's ultimately the way that it feels. We're looking at 20 plus showings over a maybe 36-hour period. That's an incredibly fast pace.
Yeah, absolutely. So this is a graph. I'll just touch on it briefly. We look at it every time. It's the market snapshot. So green is our active, blue is pending or under contract, and red is sold. So you can see the downtick in pendings that we talked about, that 11.43%, and the solds downtick just a little bit, 2.6%, and then actives were down almost 10%. So we are, and actives year over year is almost 50% lower. It's 46% lower, which is pretty crazy. We're at 4,500 homes, and that's attached and detached for all of Denver Metro. So
yeah, so 4,500 homes on the market, and we're down 40%, 46%. This time last year, that number was probably closer to 6,500, right? 6,800. That's a lot of homes not on the menu for people to look at and choose from.
Yeah. With that being said, something to be considered, and Matt, you can speak to this once I share the data. We get a question a lot is, do I wait to buy? Do I wait to sell? What does this look like? Well, average sold price year over year is almost 10% up. So, and you can see in this red line that the sold price is still above where it was last year, even though we're dipping down a little bit, and that's seasonal. It happens every year. We are still appreciating over the national average. So you have to keep that in mind, that is an indicator of a good investment, as well as our historically low interest rates. Your money really is going further. So the question is, do I wait? Well, are homes going to continue to appreciate? More than likely, yes. Are interest rates going to go up? Depends on who you ask, but eventually, yes. And interest rates go up and you lose some buying power. So you might be spending the same amount of money, but getting a home whose sales price is lower because more of your payment has to go to interest. So those are just things to think about. I know when we're talking about low inventory and 85% of homes going over asking, it can seem very daunting, but it really, truly is still a great investment. And as I said before, money is so cheap to borrow right now that your dollar is going just about as far as it can go.
Yeah, it's interesting. Is the market's going to go up and down as far as the value, yet as long as I don't sell my house, I haven't lost anything. So 2 years from now, my home could be worth 80% of what I paid for it today. I literally haven't lost anything. I still have the same number of bedrooms. I still have the same, size garage. I still have the same location. I still have all of that. Uh, Over time, it does go up. So when we saw the real market correction here now 12-ish years ago, that's really what it was a correction, and we saw values drop, and then they went up starting again about 2011, 2012, really started going up. And over time, it's going to just continue to go that way, right? When we look at historical numbers, there's not a single house in the Denver metro area that I can think of that I wouldn't have wanted to have bought 30 years ago and own it today.
Yep.
Right. I should have bought 10 or 15 of those homes 30 years ago when I was, 5, almost 6 years old. What was I thinking?
Right. Yeah.
I think about the house that I grew up in, and I'm a Colorado native, grew up in Jefferson County. The house I grew up in, my parents bought that for $130,000 back in 1989. $130,000. Today, as of a couple of months ago, I looked at the current market for that property, and it's worth about $650,000. Yeah. That's a massive increase. Now, it did go up and it did go down during that time, but you hold on to it long enough and it only continues to go up.
It does recover. Yeah, absolutely. So something else I wanted to show you that echoes what we're talking about, but it is a little bit, we talked about this, talked about it before, but this is active listings. So you can see that we are way, way, way down. This time last year, we were at 8,400, and now we're at 4,500. So that's a massive decrease. And we are under a month of supply of inventory. So we are at about, here we go. So this is combined, detached and attached. We're at just under a month, but in detached, we're at 3 weeks, just over 3 weeks of inventory. So what that means is if we had the same number of buyers in the market and no more homes came onto the market, it would only take 3 weeks for it to be gone. You can see historically that's incredibly low. The National Association of Realtors says that 6 months is a balanced market. People are saying in Colorado, it's probably closer to 4. So you can see even last summer when we had a spike in inventory and we got up to almost 2, we were still not balanced, and we're definitely not, we're in an extreme seller's market now. So that just reflects again another indicator of what we're feeling and why so many homes are going for over asking. It's supply and demand.
Well, gosh, 2 months worth of inventory, that's a walk in the park. That's a day on the beach compared to, kind of how it's been, the rapid pace that it's going. Now, the month supply of inventory, it's an interesting measure. And one of the things to keep in mind in there is in any market, you're going to have homes and properties that don't sell. The condition, the location, and the price have just put it into a spot where nobody's going to buy that home. So there's still homes sitting in the market that aren't moving, that nobody's going to pay for. So that makes the nice homes that are priced correctly that come into the market even that much more crazy to compete with. So, really sometimes if you're looking for a good deal right now, just getting the house sometimes is the good deal.
Yeah, absolutely. And lock in that interest rate because it's good.
And talk to lenders about refinancing if you haven't refinanced in a couple of years. In fact, I've got some past clients that reached out to me recently. They took a bunch of equity out of their house, put cash in the bank, and their payment hasn't changed one bit given where their interest rate was and where they're at now. They've got some plans to do with that money, yet you don't get added benefit for paying more in interest. Right? It's not like your house is that much better if you're at 5% or 6% instead of 3.25%.
Absolutely. And then the last thing I want to touch on that we look at every time, we talked about it a little bit already, but this is the sold data for detached and attached. So again, we are down 2.6% from August, but we're up almost 27% from this time last year. So our nice little wave of cyclical real estate that we normally see is not the same thing that we're seeing this year, but I do believe that we are having a slowing, and that number will probably come down or plateau a little bit in October. So we'll get that data here in just a few weeks, and we'll see what it looks like. But I wouldn't be surprised if we have a little bit of a cooling coming our way.
Yeah, I think some of this is a seasonality that we typically see. Truth be told, my instincts are telling me. Again, I don't have a crystal ball, so don't go to the news with this publication that says, "Hey, Matt said this; it's going to be a fact." I don't anticipate we'll really see inventory levels climb until we get up into maybe March, April, June of next year, as the normal seasonality comes. Now, a lot of factors that are going to come into that, yet that's just kind of what the Denver metro market has been doing over the last number of years.
Yeah, and I mean, sellers are looking at this data too. So they see, hey, it's an awesome time for me to buy, but where am I going to go? That's the biggest question. That's the biggest reason for lack of inventory is people are wondering, it's great, I'm going to get top dollar for my house, but where am I going to live? So that's a real concern. And hopefully you get so much for your house that you can still find a great place to live and have the same or lower payment. We've seen a lot more new build buyers as of late, and especially in Adams County, we have seems like a new builder on every corner. But in some areas, that's just not as much of an option. But that is definitely an option if you don't want to get into a bidding war and kind of get the most, not necessarily the most bang for your buck, but it's just a different option that we're seeing more people explore than maybe had never considered or wanted to do that.
Yeah, and we're seeing some folks that are cashing out their equity here and deciding they're going to move out of state, some places where their dollar could go further, move into other parts of the state where their dollar might go further. I'm sending referrals down to Colorado Springs to some business partners, some agent partners that I have down in those areas. Right. So, where would you go? I think everybody's scenario is going to be unique. And ultimately, that's where we want to be your partner through this. We want to take the end goal and say, how do we work backwards to what is today the best plan to help you accomplish what it is that you want to accomplish? This data always helps me analyze how do we do that. So even if you're not a numbers person, it's okay. Trust that the numbers are there. The numbers tell us a story, and they're going to give us some information to help us make relevant, logical decisions in how we move forward.
Yep. We've said this again, we've said it before, but home buying and selling can be at a very emotional time because it's our home. It's where we're living or where we're going to live. And so sometimes it can be really difficult to make a decision and feel good about it because you're like, am I being emotional? Am I being irrational? So this is just a tool for that. It's just a tool to help guide you in the direction and to set you up for what you're walking into so you can have the best experience possible and be happy in your home, wherever that is.
Yeah, absolutely. Well, it's always a pleasure to have you on this as you're prepared and your company puts this information together for us to review. So again, as always, Brenna, thank you so much for your time. Any final words?
I don't think so. I'm not ready for the cold weather, but it's coming.
It's here. It's coming. We do also want to, our thoughts and our prayers are with everybody right now that's going through the chaos of this year, right? With everything going on with the fires here locally, the political nature and the unrest, and of course the coronavirus. Our hearts and prayers are with everybody, and we just want you to know we're thinking about you. If there's anything we can ever do personally please don't hesitate to reach out. Let us know.
Yep.
All right. Thanks, everyone.
Thanks. We'll see you next month.